Very good evening to all of you. Welcome to another YouTube live session with me, Srujit Kakkar. And today is Monday, 23rd of December 2019. And before we start with the session, let's get done with the formalities. So make sure you pause the live stream. If you're watching the recording later, pause the recording, go through the disclosure, which talks about the representations, the risk disclosure, the risk involved in the market, and also about the copyrights. So today what we will be doing is we will be understanding, okay, just give me a second, let me bring up the charts first. In fact, let me do this. Oops, just give me a minute. So let's get back and let's bring up the charts. Perfect. So today's session, what we will be doing is we will be understanding first what is support and resistance, and then I'll be talking about something which probably would have never heard anyone talking about when it comes to support and resistance. So in conventional technical analysis, almost everyone follows support and resistance. So let's first understand what is support and resistance, then we'll get to one step ahead to something which probably would have never thought about, and that is what I'm going to show you with some examples today. So let me bring up a blank. Oops, just give me a minute. Let's go back. Oh, just give me a minute. Seems like the technology is not being friendly with me today. It's gonna take a few more seconds, so I apologize for this. All right, so let's go back to this and let me bring up things. So guys, just give me a few more seconds. This is how it is at times. The technology is not very friendly with you, so I'm just trying to fix it so that we can get started with today's session. Just a few more seconds and we should be back on track in few more seconds. It should not take more than few seconds. And I guess we are back on track. Okay, just a minute. Okay, all right, so that's the wrong screen. That is the screen we want to be on. Perfect. So what we'll do is we'll start with first understanding what is demand and supply, what is support and resistance, and once we are done with support and resistance, then we'll go one step ahead and I'll show you something which probably would have never thought about. So that is what I was talking about. Yes, but before we move forward, I'll add that these sessions, I don't have a fixed time for these sessions. Whenever I have time, I start the timer about 10-15 minutes before the session starts. So make sure to get notified when the session is happening. You subscribe to my channel, hit the bell icon. That way you'll get the notification about 10-15 minutes before the session starts so that you can join the session live. Alright, so now talking about first support and resistance. So what I'll do is probably I'll bring up this chart because I need some blank space. We can use this blank space to understand the concept. So what happens in support and resistance is that people are actually trying to look at the chart and they are trying to identify an area where the prices have been bouncing over and over again. So I'll just explain you the concept first, then I'll show you a few examples on the chart and then we'll move to the next step. So example, if the chart is doing something like this, right? So now what happens is when you're drawing something, this might be textbook kind of an example, but in real life things might vary a little bit. So when people look at price action, this is how the price has been moving on this chart. So this area where the prices have been bouncing over and over again, that is what they call as support, because they can visually see this is an area that every time prices were coming back, prices they moved up, right? So that is why this becomes as your area of support. Similarly, what you can see here is that this is an area where every time prices were coming back, prices again were bouncing down. So this becomes as your area of resistance, because that is what has been resisting prices. Every time prices they come to this area, again moves down, again comes to this area, again moves down, again comes to this area, again moves down. So that is how they identify the areas of support. So this is your support and this is your resistance. Now what they also believe in is that once this area of resistance gets violated, Now this should start acting like support, right? And you will also see that happening very frequently. You can see that this is where probably it again acted like support, prices they moved up, again acted like support, prices they moved up, again acted like support. So people are just looking at these turn in prices, these pivot points. Where are these pivot highs? Where are these pivot lows? Which helps them identify the area of resistance, area of support, again area of resistance, area of support. Now what I'll do is I'll bring up few charts. I'll show you these areas of support and resistance, and then we'll move one step ahead. So today's session, again, it's not going to be a very lengthy session. Like I said, my objective is to keep these sessions probably 15-20 minutes, not more than that, because I want to keep them short and crisp. But let's look at some examples now. So what I'll do is I'll bring up some charts. Let's say whatever chart we were on. Now, the way to identify these areas of support and resistance, right? In case you're using support and resistance, the first thing is whenever you're looking for support resistance, don't do something like this that you're very zoomed in. Whenever you're trying to identify area of support and resistance, the more zoomed out you are, the easier it will be on your eyes to understand where the prices have been bouncing. Like example you can see is that this is an area right here where prices have been bouncing almost over and over again. Can you see prices came here, moved down, again came here, moved down, again came here, moved down, again came here, and again moved down. So first what we are trying to do is we are vaguely trying to identify where is that structure of support or where is that structure of resistance. So here we can see we have a structure of resistance. Similarly, if you're looking for support, you can see that probably this is an area, let me mark it, where again prices have been bouncing over and over again, right? So let me draw it. So can you see prices came here, moved up, almost came here, moved up, almost came here, moved up, again moved up, again moved up. So this is what you will call as an area of support. Now when you are identifying your area of support and resistance, this is what you should be doing. Like I said, the first thing is try to be as zoomed out as possible. I mean, not too much zoomed in, somewhere in between. Now once I have identified this area as my area of resistance, then what you should be doing is you should be fine-tuning it a little bit so that you can identify an area where you have the maximum number of touches. Like here you can see if I just go to the top here, it's just one touch. If I move it a little bit lower, now you can see this is an area we have one touch, we have second touch, we have the third one, we have the fourth one. So now this becomes a much neater area for us, and that is what you can call as your area of resistance. Similarly, when you were looking at your area of support, if I start from here, can you see at this point we only have one touch, but if I start pushing it a little higher, now you can see probably this is an area where we have one touch, we have the second touch, just a little bit above, we have the second touch. Here, yes, prices they came down again, started moving up. Yes, definitely moved away from that area with quite a bit, but after that again we had one touch, again prices were touching here. So this is how you can identify where are the areas of support and resistance, by identifying looking at the flow of the price, where are the highs, where are the lows, where are the areas where prices have been bouncing over and over again. And that is what I'll say almost everyone who is doing conventional technical analysis is using one of the tool, which is to identify your support and resist. I mean, using one of the tool to plan their trades, be that they are breakout traders, be that they are traders who are looking at retracement and they are doing trades on the retracement. But yes, this is a concept which is support and resistance used by almost every trader who is following conventional technical analysis. So now that you have an understanding what is support, what is resistance, in fact, I'll also add one more thing here. Then in support and resistance, the reason I said you should be finding maximum number of touches is because it is believed in support and resistance that the more number of times a zone is tested, and that zone does, I mean, a more number of times an area of support, so I apologize because I have been trading based on demand and supply for almost over 10 years. So I have that habit of saying zone, but yes, we are talking about support and resistance as of now. So yes, in support and resistance, what is taught is that if you have an area of support and if you have an area of resistance, the more number of times it is getting tested without getting breached, the stronger the area of support, the stronger the area of resistance, right? That is what is taught. So that is why I said you can try to fine tune it a little bit to identify areas where you have maximum number of touches, so that that can be a strong area of support or strong area of resistance. But now the question is, do I believe in all this? Absolutely not, right? So that is why I wanted to start with what is support and resistance, and then I want to go one step ahead, which is what do I believe in? Now, yes, we have seen areas of support, we have seen areas of resistance, but now the question is, what creates this area of support and resistance? Because the fact is, if these areas are getting created, they might be getting created because of something. And what is that something which creates this area of support and resistance? And that something is your demand and supply zones. Now let me show you a few examples of that. Right now, it's not going to be in every case, but I'm showing you some quite a few cases where you will see it. It's very evident that majority of the times these quality support areas and quality resistance areas, they get formed at your areas of support and resistance. And by the time people they start seeing these areas of support and resistance, we are already done with the trade. I'll also go a little bit more in depth into it once I show you some examples. So I have noted down some examples. The first one is on gold and on the 240 minutes chart. Now the reason I'm taking these examples is because these are the zones which I marked in the previous session. So if you go through probably example, if you're looking at this zone, maybe if you go 2 months back and you watch the the recording sessions of the Sunday Sunday live session where I identified the key demand and supply areas on the chart, you will see that all these areas were planned well in advance. Now let's start with the example of this demand area. So the previous session we talked about what are the structures of demand, what are the structures of supply. So the structure of demand was either a drop based rally or a rally based rally. So in this case we had a drop based rally, that is why I marked it as a demand area for you. Now can you see at this given point of time, this is still not an area of support, because you can see prices have not come back to the zone ever again. But when the prices they came back, you can see that the prices they touched the zone and moved back, right? Again, prices they came back, almost touched the zone and started moving up. Now if you think about it, the time when we mark this as our area of demand, nobody could see it as an area of support. But after a while, you can see we have one test and second test. Now people will start saying, okay, this is where we have an area of support. But the question is, what created that area of support? That area of support was created because of the demand zone. If this demand was not there, the area of support would have not been created, because what creates that support? When the prices are coming here, somebody is buying huge quantities. Because somebody is buying, prices would move up, right? Again, because somebody is buying, prices will move up. But where was that demand? That demand was not here. That demand was not here. That demand was created way back in history, which is right here, which now has created that area of support. So can you see the area of support gets created because of demand. So if you know how to identify demand and supply, you are one step ahead of support and resistance, because you are trying to take trades where later areas of support and resistance can get formed. Let me show you a few more examples. You can see in this on this chart itself, we also marked this as our supply zone. So can you see when we mark this as our supply zone, this is not even an area of support and resistance, because if I take a horizontal line, you can see on the left, we don't even have a bounce. Prices have just been moving through this area over and over again. But for us, it is a structure of supply. You can see prices moved up, prices they paused, started moving down. That is what we call as a rally, base, and a drop. And you can see even my indicator is identifying this as an area of supply. What happened? Later, prices they came back almost to the same area, gave you a small bounce, then they came to the exact area, just touched it and moved back. And again, you can see prices are coming very close to it. So if you again look at it, maybe we are having this formation of resistance, but what created this resistance? This supply to the left created this resistance. Now if you think about it, people who believe in conventional technical analysis maybe have one test, we have second test, and probably now we are going to be having the third test. So what they believe in is that probably now this is a very good area to go short. But logically, if you think about it, the supply which we had here is now probably already filled, right? We don't even have more supply here. So the next time when the prices they come here and people are selling because they believe this is an area of resistance, maybe these orders are already depleted, and what might happen is instead of giving a bounce, prices might just straight away go through it. And that is where what people will do is they'll say, okay, the resistance has been violated. Because the resistance has been violated, we should be reversing our position, or we should be now getting into breakout trades, right? That is what they start doing. Okay, just give me a second. Why am I not able to delete this? Just a minute. Okay, this is strange. Okay, so let it be. I'm not able to remove this. Let me see if I can do it again. Okay, I don't know why. Anyways, so here's one example I showed you on gold, support and resistance. Let me show you a few more examples. The next one I'll take is on silver. We'll start with the silver daily chart because I've noted down some of these examples. So again, if you look here, can you see we have a rally and a base and a drop. So as of now, nobody sees it as an area of resistance. What happened? Prices came to that area once, we got a bounce, again came to that area, almost close to it, we got a bounce. And now probably people might start looking at this as an area of resistance. We also have an example right here. We have this area of supply, which is drop base drop. At this point of time, this is probably not an area of support and resistance for anyone. Why? Because if you look into this, like I said, you need to identify areas where we have a lot of bounces. We are having bounces, but those bounces are probably a little lower. But what happened? Prices came to that exact same supply zone, started moving back, again came to that supply today. Let's see what happens. But now you can see that area of resistance probably might start forming. And by the time they start seeing it as resistance, can you see where we are already done with the trade? So here also, by the time they start seeing it as resistance or support, we are already done with the trade. So that's the example on daily. This also has an example on the 240 minutes chart. Now again, this was a supply zone we marked a long time back. You can see prices came here, moved back, prices came here, moved back. In fact, if you think about this, this is a very beautiful area of support and resistance, right? So can you see we have this area acting like support, we have this area acting like resistance, resistance, resistance. Now people who believe in conventional technical analysis, so what would have happened is, as soon as this area would have got violated, they would have started buying, right? And again, making that same novice mistake which we talked about. They are buying after a rally in price, buying in an area where the chart tells us we have supply, we don't have demand, right? And what happened? Prices, they almost just touched the zone, and again you got an amazing move from that area. Again, prices are touching that zone today. Maybe might form resistance, maybe because the zone is already tested, it might go through it. But can you see, by the time they see it as support and resistance, we are already done with the trades. So that is how you are one step ahead of the crowd when you're using demand and supply, because demand and supply is where support and resistance gets formed majority of the times. Let me show you a few more examples. Let's go to GBP USD on the weekly chart. So can you see this is applicable on any time frame, right? It's not that it is only applicable to the 60 minutes or the 4 hours of the daily. So I'm just showing you different examples from different scripts. So again, you can see here prices came here, we got a reaction, right? Again, you have this area of resistance forming here, but now what do we have? We have supply sitting right above it. So what happened? You have resistance got violated, prices, they hit the supply zone, and again from the supply zone started moving down. So now people will say, okay, the resistance was breached by a little bit, and then again prices they retraced. But the fact is, this is not where you have supply, right? That is what you need to learn. That's not where you have supply. That's not where you have supply. That's not where you have sell orders. This is where you have those sell orders, because of which again prices they started moving down. And now all these areas of demand and supply which I'm showing you, if you go through my previous recorded sessions, all the recordings are available. You will see that all these zones were marked well in advance, and all this price action is happening later. But you will have to go back probably 3 months, 4 months, 6 months back and watch those recorded sessions. Let me give you another example on USD INR, which is again on the weekly time frame. So here also you can see we have a rally based drop, which is our supply. At this given point of time, it is not an area of support and resistance, because even if I go back, you can see we don't have anything happening here. But what happened in the future? Prices came back to this supply, we got a bounce. Prices again came back to this supply, we got a bounce. So maybe now people might start looking at this area as your area of resistance. But what created this area of resistance? The supply zone created that area of resistance. So again, you can see people who are looking at support and resistance, they are delayed. For us, this is where we had the very first opportunity probably to go short. And now people will be saying, okay, we have one test, we have second test, we have the third test. It's a beautiful area of resistance now. But what you need to understand, probably all the supply which we had here is now depleted. Next time prices they come back, maybe it's gonna go up, it might not go down, right? So that is how you are always one step ahead when you are doing demand and supply versus using support resistance. Let me also show you now an example on a very small time frame, which is a 5-minute chart. Let me bring this up for you. Okay, so it should be, in fact, I showed this example just a few sessions ago. Let me show you that example again. Now this was a trade which I shared with the POS Plus subscribers, because during the simulation sessions I share some trading ideas. So what I'll do is I'll just go to a bigger time frame just to show you exactly the same thing happening here. So can you see, this was our area of supply. Prices came down, prices they paused, started moving down. That's a structure of drop base drop, which we discussed a few sessions ago. And now what happened? Again, you can see prices came almost close to that area, moved back. Again came to that area, moved back. Again today came to that area, moved back. Now what is going to happen is everyone who believes in conventional technical analysis is looking at it as an area of resistance. So what is going to happen? They would be probably planning some short trades, but for us, this area probably is now completely absorbed, right? It has already been tested once, and yes, if the price they go back, it might work, but you can see, we have the opportunity when nobody else is even looking at those areas as your areas of support and resistance. So that is how you always have an edge. You're one step ahead. And now that we have the understanding what is support, what is resistance, how demand and supply is one step ahead of it, we also discussed the patterns of demand and supply. So the next session I'll do is I'll explain you the differences between support and resistance and demand and supply, right? So I just showed you a few examples, because many times what people believe is that support and resistance and demand supply are exactly the same thing. It's just a different terminology we are using. It's not a different terminology. Demand and supply and support and resistance are two different concepts. What are the differences between the two? I will give you those differences in the next session. We'll do a session where we'll talk about what is demand, what is supply, what is support, what is resistance. In fact, today we have already done what is support, what is resistance, but I'll give you some differences. Probably there, I guess, only 3-4 differences between the two. We will be discussing those differences in the next session. And now let's get started with the Q&As. So just give me a minute. Let me bring up the Q&As, and then we'll end the session quickly. Just give me a second. All right, so let me bring up the questions. I'll try to go through these questions quickly. All right, good evening everyone. So please repeat. So Venkatesh, see, what happens is when I'm doing the session, I'm not focused on the chat, and once I'm done with the session, then I look into the chat box. So I don't know what you wanted me to repeat, but yes, all these sessions are available as recordings. You can watch the recordings as many number of times. One technical indicator which you suggest is best in conjunction with demand and supply pattern. On which time frame will it be useful to use? So Mac, the fact is, I don't use any indicators, I don't use any oscillators. All indicators, oscillators would always be lagging, and something which is lagging will always be increasing your risk and reducing your reward. The best indicator in itself is identifying the areas of demand and supply. So if you know how to identify them, you don't need anything else, because everything else gets calculated from the price action. And if you know where prices can turn, you're always one step ahead, right? So I don't use any indicators. Anything which you would even try to use would be lagging, won't give you any edge, right? So that is why don't, if you're searching for something, some magical indicator which will be working well with demand and supply, trust me, you'll keep searching for it throughout your life. You're not going to find it. The best thing you should be doing is practice demand and supply as much as possible, because the more you'll start practicing it, what is going to happen is you'll start getting better and better with it, and then you'll realize that you don't need any indicators in conjunction with demand and supply. All right, so how to set targets? So Anand, I have already noted down this as one of the topic which I will be taking sometime down the line. And yes, I would also add here, guys, if you have any specific topic you want me to take, make sure you put it in the comment section, because in the chat box, once the session is done, unless and until I go through the chat, I would not be able to recall what the question was. But if you put it as a comment, I get it as an email as well, which is where I always note down what topics people are looking for, and then randomly I'll be picking some topics from these queries which I'm getting from you. So make sure you put it as a comment. I'll definitely take care of it. But I think this is already one topic which I have in my list, which is about targets. Do you think we can draw supply and just keep them and treat them like support resistance, as if we keep the zones there, even they are violated, some violated supply zones become demand zones? All right, see, the first thing is, it doesn't matter whether you're doing support resistance, demand and supply, or any other strategy. First thing is, there is no such strategy which will give you 100% hit rate. But yes, with demand and supply methodology, the advantage is that our risk is always small, the reward is big. So even if we are right, let's say 50% of the times, you can still be a profitable trader. Now, people, yes, they do believe that after the support gets violated, it becomes resistance. Resistance gets violated, becomes support. We also have a similar concept which a lot of demand and supply people, they follow, which is called as zone flip. But I don't believe in that. The reason is because the only time you will see the zone flipping is once your demand has worked like support. You will see after violation, it might work as supply, but it's not these demand zone which is working as supply, because it was working like support. Now that support is acting like resistance, right? So that is what happens. So I don't believe in demand getting converted into supply, or supply getting converted into demand. Yes, you will see that happening, but that's basically because of the concept of support and resistance, not because of demand and supply. All right. So at this time, how much time to be waited? So I'm not sure what you mean by at this time, how much time to be waited for. Okay, in supply zone, I have practiced it for 2-3 months and work on it. I plot demand and supply zones, and zones have good score in demand, but it would not work well. So Nivesh, it's not just about the scoring, right? Now probably you might have now my first question is, like you said, you are doing the scoring. So have you done the course with me, or have you done the course with someone else? So just let me know. Once I reach to your answer, I'll definitely add on to it. So did you do the course with me, or did you do demand and supply course with somebody else? Then I can be in a better position to help you understand probably where you're going wrong. Supply or demand, how many times retesting that area? One time. So see, for us, Prabhu, if the zone is tested, we would not like to use it, because if the zone is tested, the probability of pending orders has reduced. So for us, the zone always has to be fresh, right? That is how it is. For options trading, do I need demand and supply or option Greeks? See, and again, an options trade will start with demand and supply, but then you're substituting stocks with options. But it will again start with demand and supply. To understand whether you want to plan a directional trade or a non-directional trade, it will start as a demand and supply trade first. Need a topic on setting stop losses after target setting session. All right, so just make sure you put it in the comments section. I'll definitely keep noting down these queries and take those sessions over a period of time. Do you read COT reports, how institutions position themselves in the markets? No, I don't read any news. I don't watch any news channels. My style of trading is purely based on the charts and purely based on demand and supply. That is what you'll see me doing. If you join my Sunday sessions, you will see when I identify the areas of demand and supply, I'm not using anything other than just the charts, and I'm trying to understand where are the areas of demand and supply. Alright, still I'm not getting exact plotting of demand and supply. So Ganesh, this only comes with experience. The first thing is you need to know the correct methodology. But yes, as you start practicing, you start getting better and better with it. That is how it is. Can you elaborate in detail of plotting it? So see, I can go, but not very in depth, because in our courses we go very in depth into it. But yes, broadly we can maybe do a session in understanding how to draw a demand area or how to draw a supply area. So maybe we can do it broadly, but not very in depth. Fake breakout concepts. See, the first thing is we don't believe in breakouts when it comes to demand and supply, right? So when we are not using demand and supply, now, in fact, today you would have seen some example of fake breakouts, because people are believing in support and resistance. They are taking those breakouts, but the prices are reacting from the areas of demand and areas of supply. So that is why people believe it's a fake breakout, but it's not that it's a fake breakout. It's just that the resistance is not where the actual supply is. The supply zone is where the actual supply is, or the support is not where the actual demand is. The demand zone is where the actual demand is. So that is why you have those fake breakouts, and again prices, they just retrace back from those areas of demand and supply. So that's why people see those fake breakouts, because they are believing in support and resistance, but what is working behind the scene is not support and resistance. It's your areas of demand and supply. All right, good to see you. SK in bracket order is advisable. See, Hari, there is no problem with bracket orders. The thing is, in fact, it makes your life easy, because everything is managed by the computer. So nothing wrong with placing bracket orders, right? It's perfectly fine and no problem with that. Okay, so when will you take a lecture on explosive move candles? See, Shekhar, I've already noted down a lot of topics. So yes, I'm going step by step, one by one. So sometime down the line, yes, we will also be having that topic. So not to worry about it. One of my brother had done with you, but I have to learn myself, and later on, brother practice together, but it failed ratio. See again. Nivesh, right? See, again, if your brother has done the course, if he's applying the complete strategy based on the rules which I have provided, it should not be a challenge. If you are deviating from those rules, see, an example which I always give is, because many times I get a call or people, they get in touch with me and they ask me, if I do the demand and supply methodology, can I be a profitable trader? Can I start making money using this strategy? So what I always give them as an analogy is, just because you're joining a gym does not mean you'll have a very good physique. To have a good physique, you need to follow the rules religiously, which is you need to have proper diet, you need to exercise, you need to rest, right? You need to control what you're having. You don't, you should not be having fried food. You should not be having a lot of sugar, right? You need to take control of your carbs. You should be having more proteins. So can you see what happens is, similarly, when it comes to any methodology, it's not just demand and supply, probably any methodology you're using, unless and until you follow the rules strictly, you cannot have the desired results. So that is where, if you're not applying the rules, you will never be getting the desired results. Probably what I'll do is, in the next session, because I'll show you the log for the last 3 months, that all the trades which I have been sharing with students, how the performance have been of those trades, and all these trades are logged. So whenever you join, you can see that all these trades were provided well in advance. You can watch the recorded sessions where those trades were discussed. You can watch the recorded sessions when those trades got triggered. So everything is on record. All the recordings are available, and you will be able to match that trade result with those recordings which are already available to you. So you will see things that definitely work as long as you're following the rules. If you're not following the rules, then definitely you're not going to have those desired results. Alright, sir, always best learning from you from Jan 2015 and POS as well. Whenever I get confused, I just watch your XLTs once again. Back on track. Thanks for making it. Alright, thank you so much, Mac. Perfect. So that brings us to the end of today's session. Thank you so much for joining in. I'll be seeing you tomorrow. Now I'm not sure that probably tomorrow I'll be taking a session because I have some commitments, but I'll try to do a session tomorrow which will be the same topic, but we'll try to do it in Hindi tomorrow. So until we meet next, enjoy your evening. Take care. Good night, everyone.